The financial industry offers multiple opportunities for asset tokenization. Let's explore some examples before taking a closer look at one use case in detail. Fractional ownership of assets. Tokenization allows for the division of high-value assets like real estate, art, and vintage cars into smaller tokens, enabling more investors to participate in ownership. Cross-border payments. Tokenized digital currencies can streamline cross-border payments, reducing transaction fees and improving the speed of settlements. Equity and debt issuance. Companies can tokenize equity and debt instruments, allowing them to access a broader pool of investors and facilitate easier trading on secondary markets. Insurance. Tokenization of insurance policies can enable a more transparent and efficient claims process, as well as facilitate the creation of new insurance products. Loyalty and reward programs. Tokenizing loyalty points can make it easier for customers to track and redeem their rewards, as well as enable interoperability between various programs. Let's now take a closer look at the use case of tokenized funds and investment vehicles in finance. The finance sector is constantly evolving, with emerging technologies like blockchain and tokenization offering new ways to structure, distribute, and manage financial products. Tokenized funds and investment vehicles can increase accessibility and liquidity while reducing costs and enhancing transparency. Traditional investment funds often face challenges related to high entry barriers, limited liquidity, and complex management processes. Tokenization can address these challenges by enabling fractional ownership, streamlining operations, and fostering a more inclusive investment landscape. Asset tokenization can transform the finance sector by creating new opportunities for investment, improving liquidity, and offering a more transparent and efficient way to manage and trade financial products. In this use case, we will explore the tokenization of a private equity fund. The criteria for selecting this asset include its potential for high returns, traditionally high entry barriers, and the opportunity to increase accessibility through tokenization. Before tokenizing the private equity fund, a thorough valuation should be conducted, taking into account the fund's current holdings, investment strategy, and projected performance. Due diligence must also be performed to ensure that the fund complies with all applicable regulations and has a solid track record. The stakeholders involved in the tokenization process include the fund manager, underlying portfolio companies, financing partners, regulatory authorities, and potential investors who will purchase the tokens. Again, building with these participants in mind is of paramount importance. As with all tokenization projects, it is imperative to cover regulatory considerations. Tokenizing a private equity fund requires navigating complex financial regulations, including securities laws, investment fund regulations, and tax considerations. Compliance with KYC/AML regulations is also crucial, as tokens may be considered securities. While intellectual property may not be a primary concern in tokenizing a private equity fund, data privacy and confidentiality are essential. The tokenization platform must ensure that sensitive investor information is protected and secure. Additionally, depending on the jurisdiction, there may be specific rules and guidelines governing the tokenization of investment funds. These guidelines must be considered and adhered to throughout the process before designing and selecting the desired token. The appropriate token standard for this use case is a security token standard, such as ERC 1400 or SD20, which ensures compliance with regulatory requirements and facilitates the creation of a fractional ownership structure. The total supply of tokens should represent the net asset value of the private equity fund, with each token corresponding to a fraction of ownership. Tokens can be distributed through an initial offering, allowing investors to purchase shares of the fund. Smart contracts can be implemented to automate various aspects of the tokenized funds management, such as dividend distribution, voting rights, and redemption processes. The tokenization platform should employ robust security measures, such as encryption and secure storage, to protect sensitive investor information. Privacy-preserving technologies like zero-knowledge proofs can also be utilized to maintain confidentiality while allowing for transparent token transactions. The token issuance process should follow best practices for transparency, investor protection, and regulatory compliance. A comprehensive offering document should be provided, outlining the details of the private equity fund, tokenization structure, rights of token holders, and associated risks. The token sale should also adhere to applicable KYC/AML regulations. The tokens can be distributed through an online platform specifically designed for security token offerings or via a finance-focused token marketplace. Marketing efforts should target both institutional and individual investors interested in participating in the tokenized fund. To facilitate liquidity and enable secondary market trading, the tokenized fund shares can be listed on regulated security token exchanges or decentralized marketplaces that support security tokens. Ongoing monitoring of secondary market activities is essential to ensure compliance with regulations and maintain investor confidence. Regular reporting to token holders and regulatory authorities should be provided, detailing fund performance, portfolio updates, and dividend distributions. Once underway, the effectiveness of tokenizing the private equity fund can be assessed by measuring the increase in accessibility, liquidity, and overall improvement in the investment experience for both fund managers and investors. Success metrics for this use case can include quantitative measures such as the number of token holders, total investment raised, fund performance, and liquidity indicators. Qualitative measures can involve investor satisfaction, streamlined operations, and increased transparency in fund management. Gathering feedback from stakeholders, including token holders, fund managers, and regulatory authorities, can help identify areas for improvement and inform the ongoing development of the tokenized fund model. It is equally crucial to continuously evaluate negative consequences. Tokenizing a private equity fund may present technical challenges, such as integrating smart contracts with existing financial systems and ensuring data privacy. Operational challenges may include navigating complex regulatory landscapes and managing multiple stakeholders. Compliance with financial regulations and security token laws can be challenging, requiring close coordination with legal and regulatory experts to ensure a compliant tokenization process. Key lessons from this use case can inform future tokenization projects in finance, including the importance of thorough due diligence, selecting appropriate token standards, and adopting robust security and privacy measures. As the finance sector continues to adopt blockchain and tokenization technologies, there will likely be new opportunities and use cases that emerge, such as tokenizing other types of investment vehicles, debt instruments, or even individual securities. The tokenization model for private equity funds can be expanded to include other investment vehicles like real estate funds, hedge funds, or venture capital funds, creating new opportunities for investment and operational efficiency. The successful tokenization of a private equity fund can demonstrate the potential benefits of asset tokenization in finance, inspiring other industries to explore similar models and fostering broader adoption of tokenization technologies. In summary, this deep dive explored the tokenization of a private equity fund, highlighting the process, challenges, and opportunities associated with this innovative approach to asset management. Important takeaways from this use case include the need for thorough due diligence, regulatory compliance, appropriate token standards, and robust security and privacy measures. These insights can be applied to other asset tokenization use cases in healthcare and the circular economy, ensuring a successful and compliant tokenization process. The tokenization of a private equity fund represents just one example of the potential for asset tokenization in finance and beyond. Further exploration and development of tokenization technologies can unlock new opportunities in various industries, driving innovation, efficiency, and accessibility to valuable resources.